All right. Hello and good evening, everyone. Today is Wednesday, February the 8th, 2023. And I'm doing a very quick midweek market review as I touch bases on this past weekend with you guys and alert everyone about what appears to be about to happen, particularly by paying close attention to the VIX. And what I highlighted on the VIX is this shaded box, which I highlighted, which is a long-term area of support for the VIX. Over the past year, this entire area has been a strong area of support. So more than likely, every time we've made it down to this box or somewhere around this area or below it, or just within this area, there's been a tendency to see a strong bounce. And this is a weekly chart I'm looking at. So there's been a tendency to see a strong bounce from that box for a couple of weeks in a row. And I highlighted what happened each time we have traveled all the way down to that box. We traveled that far. So this market rally has been going on since about October. Now we're back in this box, and it looks like we are starting to get a solid bid from the VIX from this box area. So my expectations is for the next couple of weeks to see this VIX eventually get well away from this $20 level, as we did here, as we did here, and this is back in December of 2021, as we did here back in around March of 2022, as we did here around August of 2022, and now we are back towards the end of that downward trending cycle of the VIX, which we could possibly expect to see this VIX continue to rise over the next several weeks. So that is the thought process, is that we continue to bounce away from this box since we've been in this bear market. So every time we had a bear market rally, we would trade down to this box on the VIX and move back up. So that is yet to be seen. But right now, I told you guys last week when I mentioned this, last week we were down in the box or below the box. And if I pull up a daily chart real quick. Last week we were down in this area somewhere, and now we are moving up out of the box. And looking at the oscillators and the weekly indicator for stochastic, just still below this zero line or below this negative line in the oversold territory, but it's like it's ready to start moving up. The Williams percentage also oscillator ready to start moving up. CCI is ready to start moving up as well. And if we switch back to a daily chart, we'll see that these oscillators are already starting to trickle higher in the full stochastics, Williams percentage, and the CCI. So again, this could be a longer term move up over the next month or so. So we have to see how that pans out. Also tells you that also another indication that we could start to see markets continue to trend downward from here, at least for the near future. As the VIX goes up, not only the S&P goes down, but also I told you to pay attention to the dollar index, because the dollar index also gave us some type of precursor indication that it was ready to rally. And normally when the dollar rallies, normally the S&P or markets start to pull back. Here's a weekly chart of that dollar index that I spoke to you guys about on this past weekend. And I said it looks like it was right at a level of support, and it could possibly start to see a bounce here. And it looks like that is exactly what's happening. So we're starting to get that bounce off of that 61.8 Fibonacci retracement level. And all the oscillators are starting to turn up in the Williams percentage and the Williams percentage and full stochastics and the CCI. So if we go and take a look at the S&P E-mini futures, what we'll spot on this weekly chart, it looks like we are right at a level of resistance, just the opposite. Look at what happened anytime we made it back up to these levels over the past, since August of last year. Every time we made it back up around this level, we pulled back. And it's like we are back at this level again. We made a pullback just a little bit here around about in December and went right back up to this resistance level. And look what's happening now. Like a doji is trying to form on this weekly chart. Like it's difficult for price action to rally above that point. So again, if we look at the DXY and we look at the VIX, it's all starting to show a bottoming formation with the prices of the DXY and the VIX starting to rally. And it's like we are starting to see the opposite. Starting to see the opposite in the S&P and the other major indexes. Here is a daily chart. Folks, look at the S&P. As you can see, this has been a strong level of resistance. Pull back, rally back up to it, and look what's happening. We're getting that pullback again. And now we're starting to see some negativity in the TTM squeeze. Starting to see this dark blue bar starting to form. If you look closely at the full stochastics, it's like we are leveling out above this overbought territory, like we're about to pull back. Look at the Williams percentage; it's already starting to pull back out of overbought territory. And if you look at the CCI, it's starting to show a negative divergence. It's starting to head downward. So that's what I wanted to point out real quick, folks, to show you guys that if you pay attention to certain tools, you can see and pair them up to see what's happening with the overall market. Look at the DXY, look at the VIX. Normally what they're doing, the major markets are going to end up doing the opposite. All right, hopefully this is something that you guys can use as you finish your trading through the rest of this week and maybe over the next couple of weeks. But we're probably going to start to see the markets continue to struggle from here for a bit. So we'll see how that pans out. And if we look at a bigger picture, I want to show you some levels of support that we can possibly expect to see S&P try to hold. So that 4,000 level, which is what we been dealing with over the past week or so. We made it well above that 4,000 level, but I think, looking at this weekly chart, this 4,000 level is right about here. So that could be our first level of support for the market. So right on this 4,000 level, that could be our first, I'm gonna say short term, because I think we'll probably blow through that. That's just my honest opinion if we continue to trickle lower. I do think this 4,000 level for the S&P minis is going to be an area of support. We break that level, and here's another area of support right around 3,800. And we break that level. We'll probably come back down to test these October lows. And that would be the ultimate test. And if we do make it all the way back down to those October lows on the S&P futures, we'll probably see a bounce on that point. And then we have to see, how sustainable that bounce is if we make it back down that far. Do we hit these levels and pull back, or do we punch through these levels and continue to go higher? We have to wait and see what happens, but I do think we'll start to pull back from here. And these are some target points that we can pay close attention to. Again, as price action starts to pull back, pay close attention to the VIX and the DXY, because if they're still in rally mode, still in an upward trending mode, then and we're starting to hit these levels, and the VIX is still rising on the weekly chart, and it has not hit major support levels, then that means we'll probably continue to blow through these support levels on the S&P futures. So that's something we got to look forward to, folks. Pay close attention to as we continue to navigate through this bear market. So I do suspect a pullback here in the near future. All right, folks, until this weekend, enjoy the rest of your week, and I will see you guys later.